Episode 71, talking about Bitcoin with Trace Mayer.
Feed your interest in Bitcoin and cryptocurrencies by joining Hall of Fame podcaster Gary Leland on the Crypto Cousins podcast. And remember, we are all cousins in the world of crypto. This week's price of Bitcoin.
$4,013.18. That's up $199.68, or 5.2% over the last 7 days. Howdy, howdy, howdy. Gary Leland here.
Yeah, and Trace Mayer from the Bitcoin Knowledge Podcast. Great to be here, Gary.
Hey, it's great to have you back. You know, Trace, you may not realize this, but you realize you were on the show a year ago. I didn't know you realized that. But when you were on the show a year ago, which I guess it was just over a year ago, maybe it was like episode 4 or something, you were one of the first people I had ever had on the show that was, I guess, a super expert in Bitcoin. And I had only been in Bitcoin like maybe 2-3 weeks. And so I was so excited. I got you. Not that I'm not excited now, but I was so excited. I got this super big superstar of Bitcoin, and I really knew nothing that I was like asking you about. I mean, you educated me on Bitcoin, and that was pretty cool. So I appreciate you coming on the show, and I appreciate you coming back.
Oh, well, so glad to help you out. You know, I really try to go out of my way to help and encourage, especially new people in the space, whether they're just learning about Bitcoin or whether they're starting a show or you know, whatever they're doing. You know, I'm just happy as a clam when we got people just doing stuff in the Bitcoin space, useful stuff, helpful stuff. I don't really like this Bitcoin Cash is a real Bitcoin stuff. I mean, you know, nothing that's going to be dishonest or not helpful to people. But yeah, you know, so it's glad to see that you've stuck around, that your show's going well, that you're having fun, you know, because that's really what a lot of this is all about.
Well, you know, not only have I stuck around and having fun, you know, I've got a second show going. I don't know if you knew that, called 4 Minute Crypto. And I am so now hooked on crypto that I do that show every weekday. I mean, every morning. So I'm like 175 episodes in. So I got to be kind of dedicated, I think, to do one every morning, right?
Yeah, to stick around, especially in these bear markets. You know, that usually shakes people out, and you see like who's got some grit and who doesn't. Because, you know, a lot of people are like, oh yeah, like I would have bought Bitcoin and I would have hodled like through these bear markets, but like I actually did it. You know, a lot of people say they do it, but I actually did it. And it takes some grit, and it takes a lot of discipline, both mentally and emotionally. So, you know, I kind of congratulate you for sticking around during the hard times, because, you know, it's super easy when the price is going up, but like when the price isn't going up, like who's staying around?
You know, and I say that all the time to people who say things to me like, oh gosh, I knew I should have bought that stock, because you hear it a lot. I've been talking stocks a lot longer. I should have bought that when it was $10. I knew that was a value. I'd be rich now. And I go, no, you wouldn't. You would have sold when it hit 50. You know, because there are humps in the road and everything. And when that hump had come and it went from 60 to 30, you would have sold. So you wouldn't be rich now.
Or if it went from 10 to 8, like you would have sold, and then it would have gone to 50, and you're like, oh, kicking yourself. But, you know, it just goes to show how much noise there is in the industry and how very little signal there is. Like if somebody hasn't been around through a lot of these ups and downs, like if they don't have street cred, I would take what they have with a grain of salt. Like, where's their credibility? Like, you haven't been around.
Well, you've been around. You've done, to hodl from the prices. But before we go in, this too far. I mean, you got in at like, what, 50 cents?
No, I was publicly talking about it like a nickel, 25 cents, you know, and then it ran to $32, and then it crashed to like less than $2, like $1.90, something like that. I mean, these massive booms and massive busts, they've been just an endemic part of Bitcoin. And so if people haven't been through them, they just don't have the street cred. You know, they don't have their war stories. You can think about this stuff intellectually, but until you're actually in the moment and with the emotions, it's a totally different game. Yeah, and another problem is that people will trade themselves out of their position, because that's what the bear market does. It just like it weeds people out until there's capitulation, and then people throw in the towel and sell, and that's when the hodlers of last resort like rise again, right? And that's when they're accumulating, and then people lose their position. Like I just got an email, someone was selling 100,000 Bitcoin, like a family office was. And it's like, oh my gosh, you're going to like trade yourself out of your position. And then even if you wanted to reacquire your position, you couldn't do it. And that whole 100,000 Bitcoin, it moved in 3 days.
Wow.
Like gone, right? So, I mean, this stuff is highly liquid. People are there buying it, so yeah, it goes up, it goes down, but that first network effect of speculation is so powerful that people are buying 100,000 Bitcoin in these OTC blocks at $5,000, $4,500 a Bitcoin. And then when the market does turn, it gets so incredibly difficult to establish or acquire a position because of the price elasticity of demand, and everybody's chasing the rabbit. Like, I remember when Bitcoin ran, I did an interview, it was about $15, and it had started around 7 and it ran to 266. I don't know if people see that on the chart, but whoa, that was like huge move, kind of like we just had to 20,000. But eventually it'll be up to 200,000. But this time it was up to like $266. But in the process of that, it ran up to 50, which passed the all-time high of 32. And I had a friend, and this friend had been thinking about buying Bitcoin for a couple of years, and he finally like wanted to bite the bullet and buy some Bitcoin, and we couldn't find any for sale. And I was actually able to help him establish his position when it was $100. So it had doubled in price, like from that time, because like, we were trying to source some from BitPay, but they just didn't have enough for the amount that this guy wanted to buy. And then when we finally did buy it, we had about 5% slippage on the price. And I didn't take a fee or anything. This was just trying to acquire it because, I mean, it was crazy in those days, like Mt. Gox, and do you trust that? So anyways, we finally acquired his position about $100, and then it ran to 200. And even if we wanted to buy some from BitPay, they were charging 7% over spot.
Whoa.
To acquire the flow. So like when this stuff starts to move, you just can't buy it in large amounts. And even like when I was pricing out this 100,000 Bitcoin block, I was getting some quotes from different OTC desks out there. And for like a block of 5,000 Bitcoin, when I think it was like $5,500 was spot, but if you were selling, it would be $5,275, and if you were buying, it'd be $5,750. Like that was the spread on a 5,000 Bitcoin block.
Wow.
So like it's really difficult to acquire a large position of Bitcoin at anywhere close to like the spot prices, I guess is what I'm saying.
Well, he's kind of like, to get back into where he was at what he was at, it's going to have to go down quite a bit more.
Oh yeah, I mean the person sold his 100,000 Bitcoins, this family office did. He's out of his position. When the market turns, he's not going to be able to acquire 100. If he wants to acquire 100,000 Bitcoins, I mean, he's going to have to do it like 1,500 Bitcoins at a time over a period of quite a few weeks.
Right. It's going to be a true. You said something there, Trace, that I want to go over real quick. And I know you coined this term. Could you tell me about this? Hodler of Last Resort. I mean, that's a term you coined. I just wanted to just go into that real quick.
Yeah, so it's kind of a play on like the lender of last resort with a fiat fractional reserve debt-based monetary system. You have to have a lender of last resort or the whole system just implodes. And so that's the role that like the Federal Reserve plays, or the ECB or the Bank of Japan with the quantitative easing. And so they just print like out of thin air any number of units to like keep the system from completely collapsing. Well, when you're dealing with an equity-based monetary system, you have what are called hodlers of last resort. You have to have people that will buy this stuff and hold it no matter what the price is, like the true believers. And that provides like a floor or a stability to the price. And because I wrote the book, The Great Credit Contraction, the same week, I published it the same week Bitcoin got released. I'm like, look, we've started the Great Credit Contraction. And in the Great Credit Contraction, capital moves down the liquidity pyramid into safer and more liquid assets. And so these hodlers of last resort, they are the last line of liquidity providers because they're going to buy it no matter what happens with it. And it doesn't matter what asset you're looking at. It could be Apple shares, it could be oil, it could be whatever. There has to be this buyer of last resort or this hodler of last resort or the thing will just go down to zero, right? And when we see liquidity dry up in the market, I mean, look what happened to oil, down 7% in a day. That's kind of crazy. And when you look across at who's investing, We got stuff like Wealthfront and Robinhood, and we have all these index funds. We have a lot of people that are just passively investing. Their money comes out of their paycheck automatically. It gets automatically invested in stocks. How much conviction do you think these people really have if there's a market crash?
I wouldn't think a lot.
Well, of course not. They're not even thinking about what they're buying or why they're buying it. And it gets back to like that Bitcoin Cash is a real Bitcoin thing. Like, I don't want there to be any ambiguity, with people. I want them to know exactly what they're buying.
Well, which Bitcoin Cash are we talking about? I mean, SV, ABC, and there's a third one, I think, too, that came out, too. So, I mean, I'm not even sure what the third one is.
Yeah, it's just a complete joke, right? And then they want to do like this 10 block like reorg protection in the client, and it's like, oh my gosh, you guys are just getting ready to get totally wrecked. You have no idea how network partitions work or whatever. But anyways, like, this, I don't want there to be any ambiguity about what people are buying, why they're buying it, how to secure it. I want people to be able to claim their monetary sovereignty, because that's, in my opinion, the lowest, the base, the easiest reason to own Bitcoin is to claim your monetary sovereignty, so that you have an asset that can't be seized, can't be confiscated, can't be inflated. Like, it's just boom, it's just there on your balance sheet. And that then becomes a pillar or a foundation for your financial house. It doesn't have to be a huge amount of your total net worth. I mean, it could be 1% to 3% or something like that, but it's a part of your financial infrastructure that is so solid that you're never going to sell that. It acts as a rainy day fund. You have some real peace of mind because you've got an asset that isn't going anywhere. And to do that, you have to understand like what Bitcoin is, how to secure it, all of these things. And if you don't, if you're just chasing the rabbit, if you're just chasing the hot money, I mean, don't get me wrong, Bitcoin is great for that. It's a ton of fun because it goes from like $388 when I wrote the article Rise of the Next Fourth Great Bitcoin Bull Market to $20,000. I mean, how much fun is that? That is just unbelievably fun. But then it corrects from 20,000 down to where around like 4,000 is where it hit. Maybe it could go to 3,000. Maybe it could go even lower. But if you're a hodler of last resort, you look at these price declines as a gift or an opportunity, because you get to acquire more Satoshis, which are the only thing limited in amount on this planet besides your time. And you get to acquire more of those at the same price relative to other assets like dollars or GE shares or whatever. So, hodlers of last resort, they don't really mind the price going down. They actually like it because they get to buy more of it for the same price.
Kind of like a Black Friday sale.
Yeah, it's Black Friday sale. And like, I've started trading on Ledger X. And so I have a whole bunch of calls that I've sold. Like I have calls at 50,000 Bitcoin in December, 25,000 Bitcoin in December. I got all that premium. So as long as Bitcoin doesn't go above that price, the options, they're going to expire worthless. And I just keep the premium with no liability. And then I get to acquire more Bitcoin with that premium. So like, this is a way that hodlers of last resort can keep acquiring more Satoshis.
Well, you just mentioned Ledger X, and then we have Backed coming. So we got big players getting in the field here. What do you think of that? What are your thoughts on what's that could possibly do to the market? All these big players getting in here.
Oh man, it's just going to be beautiful. Absolutely beautiful. You have no idea how hard it was to buy Bitcoin when it was a nickel or a quarter.
Yeah, no, I don't. You're correct. I wish I did know how hard it was.
Yeah, let's send an envelope of cash to like this person who's got some trust in the web of trust. Like, no, it was like.
Is that how you actually bought your first Bitcoin, Tris? Was sending cash to somebody?
Well, I mean, I don't want to go into details about how I got
I'm sorry, I'm not trying to keep
Bitcoin.
But a lot of people did that.
Yeah, but this is how like some of the first Bitcoins traded. I mean, because sometimes it would be like $200 would be the total global trade volume for Bitcoin. I mean, sometimes like one person would be the entire market on the buy side, right? As the hodler of last resort in the early days. And even today, we still see this with large blocks of Bitcoin trading OTC. I mean, it's a huge market, like the OTC market is, as opposed to these centralized third-party exchanges. So it's interesting to see that has stayed kind of as a functioning of the Bitcoin market. But getting to backed, we're talking about the 800-pound gorilla here. These guys own the New York Stock Exchange and ICE, and these are the largest, deepest commodity markets in the world, exchanges, and they're going to start trading magic internet money, and it's going to be fully collateralized options eventually. LedgerX already is fully collateralized options. It's regulated by the CFTC, all the AML KYC. So I mean, we're talking massive pools of capital can start coming into Bitcoin. Hedge funds or banks or institutions, and they're going to be warehousing it. They're going to be taking care of this custodianship issue when it comes to private keys. I mean, back in the early days, it was so crazy. Like the client would create 100 private keys for Bitcoin, and so that's what you'd back up, right? Well, guess what happened if you did a few transactions? Next thing you know, you're using your client, but you don't have those keys backed up, because you only back up 100 keys at a time. I mean, you know how dangerous that is?
Yeah.
And so, that's one of the reasons I funded Armory, because with Armory, one, we innovated cold storage, the whole concept of it with Bitcoin. And two, we innovated what are called hierarchical deterministic wallets. And that's where you have a seed, and then from the seed, you can derive a bunch of private keys. So before Armory, that infrastructure for custodianship did not exist. You had to use a computer that talked to the internet with the Bitcoin client. I mean, I guess you could turn your internet off and stuff, but I mean, it's just totally different. Now we've got hundreds of millions of dollars of insurance being provided to multiple different players and exchanges. We've got about $6 billion of total insurance across the industry, which is still a drop in the bucket, but that starts providing assurances to institutions with these custodianship options, and that's what enables confidence and just large amounts of capital to start coming into the space, and so I'm incredibly excited about Backed. We're going to get to move away from price discovery happening at places like Bitfinex and Tether on shady Chinese exchanges to price discovery happening at CFTC regulated, the largest players in the space, in the whole commodities space. This is going to be, we're going to get some true price discovery that's starting to happen, because institutions are largely shut out of being able to hold this asset or even trade it. So I think it's going to be an incredibly exciting time that comes.
Now, they've moved that launch date back to January. They just announced that, I saw. So I don't know what that means, that they weren't ready or they.
Well, yeah, I mean, there are lots of moving pieces. They're waiting on regulatory approval. But the other thing is what? Think about it. You're getting ready to add price discovery, and you have all your high frequency trading and all this stuff lined up. You want to be acquiring as many Bitcoins as you can during the bottom of this bear market. And so what do wouldn't surprise me if there's coordinated attacks happening on stuff like Tether, because now Bitfinex is charging 3% to wire your money out of Bitfinex.
Wow.
I mean, you know how ridiculous that is? You want to wire $100,000 and they're going to charge you $30,000?
Yeah, that's a hefty bit there. Yeah. And from what I understand, the money is not coming that quickly either.
Oh, yeah. I mean, it's taking weeks if you even get it at all. So, I mean, when we saw the previous crash from that $1,300, it went down to 180. I'd been interviewed. It was around 400, and I was like, yeah, I mean, it could go down to 300, but if something really bad happens, like Mt. Gox fails, maybe it could go down to 200. Well, sure enough, Mt. Gox failed and it went down to 180. What we're looking at is the failure of Tether, the failure of Bitfinex, the failure of a lot of these Chinese exchanges that are using Tether as their base token for a lot of the trading. We're looking at the failure of Roger Ver and Craig Wright and Jihan with Bitmain. I mean, Bitmain's balance sheet has been absolutely shredded Like they hold a bunch of Bitcoin cash, but that
Right.
stuff's evaporating into nothing. They hold a bunch of inventory, but that stuff's worthless because the difficulty's up and the price of Bitcoin's down. They have $550 million of debts that they owe to
And they're
like
trying to
TS.
do an IPO right now.
Yeah, and they're trying to do an IPO. That isn't going to work. Like, and actually, hodlers of last resort, you know what they like to do? They like to periodically bankrupt the miners
Oh,
because then you get to take the satoshis that the miners had.
so
so
opens
so
up a whole new source there.
Well, yeah, it opens up a source for Bitcoins because you get misallocation of capital as the price goes up and the mining profitability is really high. That helps shift the balance away from hodlers to miners. And so as the market corrects and goes the other way, you have to start liquidating the misallocation of capital that the miners did in overinvesting in mining infrastructure. And so the miners have to start taking those losses. And hodlers, hodlers is where it's all at because they don't have any monthly expenses. They don't have any employees that they have to pay. Bitmain's got 2,500 employees. That's a big chunk of cash that you have to write out every month in paychecks. Plus, they have to pay electricity, rent, insurance, capital expenditure on the real estate. You have a lot of expenses when you're mining. And just like any other industry, there's going to be over allocation of capital to that, which is going to misallocate it. And then that wealth has to get destroyed, which happened when they did it. It just has to get marked to market. And so it's a process that the hodlers of last resort are able to inflict pain on the miners. And it's actually a good thing because it's good to weed the miners out because then only the most efficient and the most productive survive. And so it's a good thing to kind of exterminate part of the mining herd here and there, and in the process acquire more satoshis, and then that lays the foundation for the healthiest, the most profitable, the strongest miners to really do well going forward. And it's not just mining, but it's everything else that filters out from that first network effect of speculation. So companies, exchanges, wallet providers, merchant processors, like everything that filters out from that first network effect of speculation, which centers in the hodlers of last resort.
Very exciting. This is very exciting times. Very exciting, very nervous. First time I've gone through something like what we're going through right now as far as pricing goes. Now, I have a question for you that I've not asked anyone, but before I do that, I want to do a sponsor spot here. I want to tell everybody about Crypto Crybaby. That's a brand new website that I created for T-shirts, caps, hoodies, and other great Bitcoin gear. So if you have someone who is a Bitcoin fan, for Christmas, you may want to check out CryptoCrybaby.com for that perfect Christmas present. So I wanted to get that in real quick. But here's my question for you, Trace. The halving. I've never gone through a halving. We got one coming up in 2020. And I haven't asked anyone this before, and I want to know, from your experience, as long as you've been in here, what normally happens during a halving? Do we see a price increase? Do we see a price drop? Do we see nothing? What normally is the results of a halving that you see? Is there any immediate result we see from a halving?
Well, I've been through two of them. From the fundamental level with the network, it just hums along just perfectly. We've had no issues in terms of the code or anything like that. It's very interesting how the market reacts with these things. You would think that because it's known in advance, like so far in advance, that the market would have adjusted to it. But for whatever reason, it doesn't seem to adjust that well to it. The miners somewhat, but the market itself, not really. And I think the reason for this, it gets to the price elasticity of demand for the transactional demand component of Bitcoin. So Bitcoins are limited in amount, and everybody knows the supply. So supply is fixed. So we only have two components for demand. We have speculation demand, which are the hodlers of last resort or other people chasing the rabbit. And then we've got transactional demand, which are people who are actually buying it to use it for some transactional reason, sending the value over a communications channel. So they're using it to gamble on a website or buy stuff off a website or whatever. Well, this transactional demand component, because the people are holding the Bitcoin for such a short period of time, they don't really care what the price is. It could be 5 cents, it could be $5,000, $50,000. They don't care, right? Because they're just holding it for maybe a day at the most. And so because of that, because that price elasticity of demand for that particular component just doesn't matter, when you have a shock in the supply of saleable Bitcoin, then we seem to see the price has some type of a melt-up effect to get things back into equilibrium. So like whenever you have a big supply shock, like when the Silk Road coins got seized, everybody's like, oh no, Bitcoin's dead. Well, no, what happened is they seized $150 million of the transactional demand component of Bitcoin, and everybody had to go out and buy $150 million worth of Bitcoin in order to be trading to use it for that transactional demand, on like Sheet Market or whatever the new dark net of the flavor is for the day, right? And so that actually caused the price to melt up really high because the hodlers of last resort are like, well, you're not getting my Bitcoin, right? And so they had to keep bidding the price up until eventually somebody got shook out and sold their Bitcoin to them. And so I think we also see this with mining, although it seems to be getting moderated because the percentage of mined coins relative to the total supply stock keeps getting smaller and smaller. I mean, by the time that halving happens, Bitcoin will have a lower inflation rate than gold. I mean, it's going to be the hardest money the world's ever seen. And so, if there are hodlers of last resort, then that price is just going to have to keep marching itself up. And the saleable supply, because the miners, they usually have to sell some of their Bitcoin to pay electricity or paychecks or whatever, right? And so they're usually a source for Bitcoin. Even though they're doing hard work, hopefully they make a profit and they get to keep some Bitcoin as a result of that, but they don't get to keep all the Bitcoin they mine. They have to sell most of it for their expenses.
Cover the cost, yeah.
Yeah, to cover the cost. And so when the supply of Bitcoin dries up from miners, which are the natural source of like transactional demand supply, then you get a shock and it has to, like, price just has to readjust. And since Bitcoin is fixed and limited in amount, we get these violent moves. If you look at the implied volatility of Bitcoin, it's just really high compared to other assets. And I think it's just part of the dynamics. And so what do? You start buying and hodling, especially when the Mayer multiple is, where it's at right now. I mean, it got down to like 0.68 or something like that.
When you brought that up, explain that real quick, because we get a lot of new people in crypto world here that may not be familiar with the Mayer multiple.
Oh, okay. Yeah, so I didn't name it. Like, it's named after me. And there's several websites like mayermultiple.com and mayermultiple.info, so you can actually see the charts and stuff. People have made them. They're not affiliated with me other than using the name. But it's a helpful tool. So what I've done with it is I take the current price divided by the 200-day moving average, and that gives a relative price. And then you can actually plot that relative price over time. And so you can see where Bitcoin is statistically cheap or statistically expensive based on what that multiple is. So like when the multiple is above 2.0, Bitcoin is expensive. And when it's below like 1.0, it's cheap.
And it's 0.66 right now.
Yeah, it's like 0.66 right now, which means that 95% of the time, that relative price is higher, right? So like everything else being equal, assuming you still agree with the fundamental thesis or reason to buy Bitcoin, it's a good technical analysis indicator from a big picture view to give you, oh, it's a good time to buy right now. It's 0.66. Like 95% of the time, that ratio is higher.
Yeah, it says the average is 1.42. So this is over half of the average.
Yeah, so if it were to correct back to normal, we'd be looking at what, like $10,000 Bitcoin approximately?
Yeah, correct.
So I mean, this is like, hey, statistically, it's a good time to buy. And so, like, what do? If you buy when the Mayer multiple is really low and you sell some when the Mayer multiple is really high, and then you can use that to fund a lifestyle or whatever. And even better if you use fork proceeds that you sell. That way you're always accumulating more Satoshis.
That's a good way to look at it.
Yeah, I mean, that's like a good way to kind of...
Yeah, you're never touching your base.
Yeah, you're always increasing your base in terms of number of Satoshis, because you get all these Bitcoins from like Bitcoin Cash and Bitcoin Gold and Super Bitcoin and Bitcoin Diamond and Micro Bitcoin and Bitcoin Clear and Bitcoin Clean and like Bitcoin Pizza and Bitcoin Atom. I mean, there's like tons of them, right? And you get all these Bitcoin, United Bitcoin. I mean, this was crazy. United Bitcoin was trading for $350 in January. The blockchain, it's completely dead now.
Oh my gosh.
So if you had figured out how to harvest and sell those Bitcoin United, Now now you got Satoshis and the Bitcoin United are worth nothing, right? Like, hey, get out of that stuff. Like Bitcoin Private, it was trading at like $50. Now it's trading less than $2.
Wow.
Bitcoin Gold.
That was like 300 at one time, I think, and it's like
Yeah,
25 maybe.
Yeah, less. I think it hit like 20. And so, I mean, like Bitcoin Cash, my average sale price is 0.118 Bitcoin per Bitcoin Cash, like my average sale price, because, it took a long time to move out of that stuff.
Yeah, Bitcoin Gold, $21.12 right now.
Yeah, I think my average exit price was something like $180 and something like 0.05 of a Bitcoin. And now it's like not even, it's just a tiny fraction of that now. Being in Bitcoin, you kind of see these things. You can take advantage of, and the other thing is like, I sold when I was selling these, the trading pairs were not necessarily like Bitcoin Gold Bitcoin. It was Bitcoin Gold Tether. And so, I'd sell it, I'd be in the Tether, and then I'd wait for the Bitcoin price to correct, and then I would buy Bitcoins and then withdraw them out, because the Mayer multiple was high. And it's like, oh, Mayer multiple's high. Like I might as well just sit in Tether for a little while, let that price keep correcting, then get the Bitcoins, then withdraw them out of the shady exchanges.
Right.
So, like using that Mayer multiple as a tool, especially if you're gonna, because I'm not like a get rich quick guy. Like I'm not into these Ponzi scams and like ICOs and like all this stuff. Like neither borrower nor lender be. Like avoid debt like you'd avoid the plague. Invest in safe conservative assets. Like have a rainy day fund, dollar cost average in or out. I mean, these are kind of principles that I like to apply because I want to have a financial fortress that, like, not just a castle. I want a moat and I want hills and I want mountains like around, so that it's just impossible to make any type of assault on my financial position, right?
Right.
And you want to come, you got to go through those mountains. And guess what? I'm the Hodler Of Last Resort that's got, like, I'm those mountains. Like,
you're on the top of the mountain, so you can see them from far away.
Oh, yeah. It's like, really? You think you're going to do a contentious hard fork with us? Yeah. Like, good luck with that.
By the time you get up to the top of that mountain, you're worn out.
Yeah, well, I mean, look at what's happened to Bitmain and Jihan with Bitcoin Cash. I mean, my average exit price is 0.118. It's below 0.06. Even counting like ABC and SV together,
right?
They're just getting bled out. Guess what I'm doing? I'm using fork proceeds to sell call options on Ledger X to acquire even more Bitcoins.
That's a smart move. I guess that's why you are the one who invents the terms like Mayer multiple. You know what you're doing.
Yeah, I mean, the game is really not that difficult. Like it's actually pretty simple. And the hodlers of last resort are the ones with the power. It's like, okay, you want to be a hodler of last resort, Jihan? You hodl that Bitcoin Cash all the way from 0.2 to 0.05. You want to lose a couple $1 billion? Jihan just showed people how to do it.
Hey, one of the questions, we have a lot of new people that listen to the show, and I think you may even have already answered this, but I mean, you definitely answered it, but I want to see if there's anything specific. Is there any one piece of advice you'd give someone new to Bitcoin that might be listening and saying, hey, here's something? I think telling them about the Mayer multiple was definitely one, but is there anything else you might want to say?
You have to invest in yourself. You have to develop your own human capital. That means you have to develop knowledge. You have to understand how stuff works. You have to understand how to secure your Bitcoins properly. When you're learning and trying to do this stuff, hone in on signal, not on noise. I mean, I've got an archive of hundreds of Bitcoin Knowledge podcast episodes where I've interviewed the top people in the space. Like, look, I do it all gratuitously, like all charitably. I don't have like ads and I don't do sponsorships. Like, I do it as a gift to everybody to be nice and altruistic. And for me, it's about Bitcoin and it's about monetary sovereignty. We can put the tech out there, but the political will is what'll keep it out there. And so that's why I want to, bring more hodlers of last resort into the tent, why I talk about this stuff. Because otherwise, I'd be acquiring Bitcoin. I wouldn't want anybody to know about it because then I'd be able to buy it cheaper because eventually people are going to figure it out, right?
Right.
But I mean, like, I've kind of made that decision, kind of like a Thomas Jefferson that, I'm going to be in the ring. And so, really, really scrutinize people that you're going to listen to, hone in on signal. Don't even listen to the noise like fake Toshi and stuff like that. It's just so easy to get distracted.
And by fake Toshi, you're talking about Craig Wright of Bitcoin Cash SV.
Yeah, I mean, it's like, seriously?
I said the other day on a show, I said, he claims to be Satoshi, so he must really know, since SV is Satoshi's vision, he must really know what the vision was.
yeah, which it looked like Satoshi's vision was making money, not losing it. And Craig Wright, all he's done is lost a ton of money. I mean, they've already burned like $7 million on this Bitcoin Cash hard fork issue.
I heard it was $250,000 per day.
Well, yeah, for like ABC, but for SB it's even higher.
Oh, I was just talking about one. Yeah, you're right.
And it's like, you guys didn't learn your lesson when you picked a fight with the Bitcoin hodlers of last resort and lost a couple $2 billion. I mean, they already tried this and they got wrecked. And so now they're fighting with each other and they're getting wrecked. I mean, like, be careful who you listen to. Right. It is so important to develop your own human capital. I mean, this is about personal responsibility. Like, nobody's bailing you out, and nobody's going to have the ability to bail you out because Satoshis are limited in amount. Bitcoins are. There's no getting bailed out with this stuff.
Well, speaking of who to listen to, next week we have Cousin Bitstein on here. I don't know. Do you know Michael Goldstein of the Satoshi Nakamoto Institute? He's our guest cousin next week. Yeah,
so both him and Pierre, they've been following my work for a long time.
Yeah, they're both great guys.
Yeah, and I mean, they've done great work with the Nakamoto Institute. There's really good writings over there for you to read, like hyper-Bitcoinization, although I kind of disagree that that's how it's going to play out. I mean, this is the type of thing, it might take 50 to 100 years to really transition this. We're changing our time preference, right? Like from a very short time preference to a really long time preference. And we're going to be building all of this stuff out over the years and the decades to come. And like, we're going to build it right. We're not just going to like cobble stuff together and like duct tape it, like Bitcoin Cash or some of these Dogecoin or some of these other things. Like, we're doing it right, and we're doing it first. And that's why Bitcoin is destined to become the reserve asset. I mean, this is a huge thing, a huge undertaking that we're trying to do.
Well, they both are great guys. I love talking to them. They were at our conference, BitBlock Boom, which I wish I could have gotten you to come to. We had a great, Saifedean was there, and he said this was the first Bitcoin maximalist conference he'd been to in North America. So I knew you would have loved being there.
Yeah, I mean, I really like his book, The Bitcoin Standard.
Great book. I just finished it, actually. I got it from him in July at the conference, and I finished it. We were down in the West Indies on a cruise, and I finished it on the cruise, and that's a great book.
Yeah, I mean, there's some things I'd kind of sharpen up or polish here or there, but I mean, great book, and it's hard to put together a book like that. I mean, I've written several books. I probably should have written a book about Bitcoin, kind of like that one, but hey, we're limited in amount by our time, so.
Right. Well, the time is the one thing that is limited besides Bitcoin, like you said earlier.
Yeah. I mean, those are our two things. And like with Bitcoin, with enough Bitcoin, you can buy pretty much an unlimited amount of other people's time. That's what we're talking about with wealth transfer,
Right.
And so, it's just an incredibly exciting time to be alive and be involved in like the center of the great fight of our age. I mean, we're fighting over what money is right now globally, or is it going to be dollars? Is it going to be euros? Is it going to be gold? Or is it going to be something new like Bitcoin? And everybody gets to make a choice every single day about what they think it is and what it's going to be. And so, Bitcoin has given everybody a fair opportunity to hitch their wagon to it or not. So people if they haven't taken advantage of that, they really have no one to blame but themselves.
Right. I mean, there's enough talk out there about it. People should be familiar with this. Hey, we're getting over our time limit here, which that happens every show. So that's just the way it is in life. I don't think I've ever hit my 30-minute mark ever on this show, and this is episode 71 or something. But I do want to let you know, I'd love to have you come back and be co-host again someday in the future. I really enjoyed this. I enjoy it because I get to ask questions I want to know the answers to. That's the best part of doing the podcast. You can get experts like you on the show and ask questions that you're interested in, and other people can gain knowledge because they're probably questions they want to know too. So I want to thank you for joining me and being the first guest of season 2. That's only fitting.
Oh, well, thanks so much for having me. And yeah, I'd love to come back and do a couple little co-hosting with you. I know I'd sent in a couple things I talked about, like with cold storage and
Yep.
some other stuff. I think and you did put those on those shows because
Anytime you have anything you want to send in or anytime you want to come on, you're one of those people that are always welcome here. That's for sure. Hey, I want to make
thanks
sure
so much.
I want to make sure I cover this before I get out of here because I don't want to miss it. Where can people follow you? Where are the best places to follow you or find you? Because Trace is definitely worth following.
Yeah, so there's Twitter, like at Trace Mayer, and then there's the Bitcoin Knowledge Podcast, so www.bitcoin.kn. And from there you can find other stuff, like when I do interviews on other shows or TV or whatever.
Good enough. For Trace, again, I appreciate you so much coming on the show.
Well, thanks so much for having me, and keep up the good work and everything you do, like helping people with the show. It's not easy to be in the ring doing what we do, being public personalities. So just thanks so much for doing that.
Oh, and thank you again for what you do. I mean, you have educated so many people, including myself. I mean, I'm not just blowing smoke. I'm just telling you, you have provided a key service that was needed and has been needed and still is needed. And you started so early. And the information you have because of your experience starting so early are experiences and knowledge that a lot of people just don't have because they weren't around at that time. I mean, how many people were getting into this at that low of a price that long ago, going through these ups and downs, hodling that long? That's amazing.
Yeah, not too many.
Yeah, not too many, that's for sure. Well, thanks again, Trace. I've enjoyed it completely. I hope you enjoyed today's show. A big thank you to all the cousins out there that are supporting the show by donating, subscribing, and leaving great reviews on iTunes. All of those things help the show more than you can possibly realize. If you want to show your support by donating cryptocurrency, Bitcoin, or by joining the Patreon page, just go to CryptoCousins.com/donate. You can subscribe almost anywhere podcasts are available by going to CryptoCousins.com/subscribe. I want you to get involved with the podcast, so call me with your comments or questions at 747-777-9471 or email me at TheCryptoCousins@gmail.com, and I will try to use your comments on future episodes. If you're really interested in keeping up with current news from the world of Bitcoin and cryptocurrency, make sure and check out the 4-Minute Crypto Show that I produce every weekday. That's right, every weekday, 5 days a week. You can find it at 4minutecrypto.com, and it is the place to get your daily dose of crypto news in 4 minutes or less. And one last thing, please take a look at my new website, Crypto Crybaby. This website is for the true Bitcoin and crypto fan and sells Bitcoin and crypto gear like t-shirts, caps, and much, much more. Take a look at CryptoCrybaby.com today. Thanks again for joining me on today's show, and I'll see you next week. Love you guys.
Thanks for listening to the Crypto Cousins podcast. Please share the show with your friends. They can subscribe by going to CryptoCousins.com/subscribe. And if you want to know more about Gary, just go to GaryLeland.com. Make sure and join Gary and all the Crypto Cousins every week for a new episode of the Crypto Cousins podcast. The Crypto Cousins podcast and the information included in the podcast are not intended as investment advice. Investing in any cryptocurrency is risky, and you should never invest more than you can afford to lose. Always seek professional advice before investing in any cryptocurrency. Please understand, you are using any and all information from the Crypto Cousins at your own risk.